Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Wednesday afternoon is Ryan McCormack, factor and core equity strategist at Invesco, to discuss weekly 100 performance in the Nasdaq-100. And Ryan, if we take a look at your first chart here, we can see that the NDX has picked up some steam over the past week.
Yeah, it has. So QQQ outperformed. It was up 0.81% versus the S&P, down 0.04%, and the S&P 500 value down 27 basis points. You know, when you look at the performance for the week, it was pretty much all driven yesterday. And that was following comments from Treasury Secretary nominee Janet Yellen, where she had talked about going big, and she presented to the Senate Finance Committee around her $1.9 trillion potential stimulus to help to combat some of the softness that we've seen in the economic data driven by COVID. But you know, that big move was really driven just yesterday, and we've seen that continue today with the Nasdaq 100 and QQQ outperforming. The story today a little bit different, right? Driven by Netflix after a very solid earnings report. You know, when I checked last about 15 minutes ago, the stock was up 17% on the day. Added over 8.5 million subscribers for Q4. That pushed them to over 200 million subscribers overall. It's got $8.2 billion in cash. Mentioned that they don't need to externally finance or lean on debt for their growth. And there was even mention of buybacks, which is pretty surprising when you look at Netflix. Beyond that, you have Alphabet up over 5% again as of about 15-20 minutes ago on a number of analyst upgrades. So we've seen some strength renewed here in some of these large innovation names that has certainly carried the outperformance, not only for last week, but in the trading session today.
Yep, and if we even take a look at your following chart here with sector performance, information technology, again, I think it's safe to say that this isn't just the stay-at-home trade, it's the work from anywhere trade, the accessibility from anywhere trade. It's not, I don't think 2020 was just an anomaly in that respect.
No, I think, however it looks, right, whether, at some point we'll be going back to the office, but I think most people do expect that it'll be some sort of hybrid model, right, where you probably have some flexibility in terms of where you work, maybe a few days on in the office, a few days off, but regardless, I think the need for connectivity has become paramount, right? That really isn't going away no matter where we work. And I think when you look at the sector performance, as you said, technology, communication services, sort of picking up the torch. When you look a little bit of a back off or backup of that value reopen trade, you have financials down 1%, materials down nearly 2.5%, and industrials being negative. And I think when you start to look at some of the data that's been coming in, it is soft. And you look at something like initial jobless claims, right, on the 1 year. The chart looks fantastic in terms of recently because it shows pretty meaningful, meaningful progression versus those outsized March and April numbers. But really that kind of skews the graph. Break it down to the 6-month chart, and you can see over the past couple of weeks that indicator has softened. We've seen that number climb up to 800,000. Just last week, climbed up to 965,000 initial jobless claims, the highest level that we've seen since August. So, all of this kind of coupled with this stimulus talk, the stimulus is necessary, and that reopen trade, unfortunately, I think in investors' eyes, is not as soon as a lot have expected. So we've started to see investors pile back into that work from home, right? That technology, the connectivity trade. And, I think as we look over the last 2 weeks with certainly the example that Netflix set last night, people will be scrutinizing earnings and to see how these companies have continued to capitalize within this work from home environment.
All right, Ryan. Appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.